Good afternoon. Thank you for joining us. I have a presentation on global economic challenges and Turkey. I hope you find it useful. I'll go through a number of slides, and towards the end, I'll be happy to entertain questions. So, it will be a two-way traffic here. So that's my outline. Global macro challenges and how Turkey is positioned. We have a program that is aimed at reducing vulnerabilities, building resilience, but also putting Turkey back on a high growth trajectory. And finally, how do we leverage Turkey's regional position in the current climate? We are at the VUCA moment for the world. VUCA is an acronym used by United States Army. It stands for volatility, uncertainty, complexity, and ambiguity. I guess the last, couple of weeks have provided much of this. Just look at the Global Economic Policy Uncertainty Index. It is almost at peak. This actually is as of, it doesn't reflect the March volatility, it doesn't reflect March uncertainty. Chances are it's higher. There is actually a volatility index, and that's also peaked recently. What is driving this? It's largely trade protectionism, which has become something of a new normal. If you look at the number of trade restrictions, in particular post-global financial crisis, it has gone up by almost 11 folds. And this does not yet reflect the recent restrictions, the recent tariffs. This is as of end of 2024. If the current state of affairs prevail, chances are global growth will be significantly lower than what it has been or relative to the base case scenario. There's a study by the IMF which foresees a 7% decline in global GDP on the back of this trade fragmentation. Now, 7% is a big number. It is as big as Germany and France GDP combined. So these are big numbers. Why? Why trade wars? Why all these protectionist tendencies? It's really simple. European Union, United States, Japan, all these major industrial countries or regions, they've lost a lot of ground in global manufacturing. As you can see here, China has gained. Obviously, everyone has lost. China now dominates global manufacturing. China also is now the main trading partner of almost everyone around the world. Look at this chart. China versus United States or China versus EU. Compared to a quarter century ago, now most countries have China as their main trading partners. So that's really what is driving it. How about Turkey? How vulnerable is Turkey to trade protectionism? We believe that we're going to be relatively more resilient. So let me make the case for it. First of all, if you look at exports of goods and services as a percent of GDP and compare that with per capita GDP, as you can see here, we are relatively not, compared to other countries, our dependency on exports in terms of maintaining our growth, prosperity, compared to many other countries, it's lower. meaning exports is not the main driver of Turkish economy. In fact, historically, net exports have been a drag on growth rather than being a driver of growth. Looking at the other way around, this chart here, again, if you look at final consumption and investments, meaning domestic demand, relative to per capita GDP, as you can see, is the main driver of Turkish economy. So that's really what drives growth. And therefore, Turkey is less exposed to a more inward-looking world. That doesn't mean you don't get affected. It just means, relatively speaking, you get affected less. So that's the summary. Another point is that we are better positioned to navigate protectionism. Why? Well, first of all, we are mainly focused on our immediate neighborhoods, where we have strong geographic, cultural, historic links, as well as rule-based trade frameworks. Look at this chart here. 62% of Turkey's exports go to countries that we have free trade agreements. So unless they walk away from these agreements, our trade, 62% of our trade, exports, is rule-based. And I don't see that happening because one of the main trading partners, of course, is European Union, and the European Union continues to advocate rule-based multilateralism. Therefore, the risk there is relatively low for the foreseeable future. And other countries are predominantly, again, in the immediate neighborhood. So, as you can see, almost 62% of our exports are relatively insulated against the risk of fragmentation. Again, at a time of global fragmentation, you tend to look at antidotes, fixes. And those fixes usually come in the form of regional integration. As they say, you rise with your neighborhood, you fall, you decline with your neighborhood. That's why we are at Diplomasi Forum. That's why Turkey genuinely wants a stable, peaceful, and prospering neighborhood. Why? Well, because it's in our interest. We would benefit most because we are a big exporter of services, whether it is tourism, whether it's medical tourism, whether it is education. So we are better positioned in the region. We are the region's main manufacturing base. There you go. So that's why Turkey is now investing in enhancing connectivity within the region. Connectivity matters. So Turkey is part of Middle Corridor, linking China to Europe. Turkey now is helping build another corridor called New Development Road, all the way from Iraqi port to, again, Turkey, connecting it all the way to London and to Beijing. Because these are some of the most effective, most cost-effective linkages. So we will continue to invest in connectivity, in peace, in security, and in prosperity of the region because we would benefit most. Another major global problem is rising global indebtedness. Global debt to GDP ratio has gone up by over 100 percentage points over the past 2.5 decades. This is pretty dramatic. Typically, if interest rates are low, you can live with that. But if trade protectionism leads to higher inflation and higher interest rates for longer, that means many countries will struggle because they would have to earmark more public resources for servicing debt as opposed to investing in infrastructure, in healthcare, in education. So the world is faced with a significant speed limit in the form of high global indebtedness. How about Turkey? Well, let's look at picture in a more detailed fashion. If you look at Turkey's debt to GDP ratio, including household debt, government debt, corporate debt, it's 93%, compared to emerging market averages of 245% and world average of 328%. So as you can see, while we suffer from high cost of debt, like everyone else, all emerging markets, spreads have gone up, CDS have gone up, but luckily, our debt to GDP ratio is pretty low by emerging market standards, which means, again, once the turbulence is over, once the dust settles, you know, people right now, I mean, investors are indiscriminately selling. They're moving to cash or risk-free assets. Emerging markets are risky. Technology is risky. Equities, risky. So that's why they currently in an indiscriminate mode of essentially reducing positions everywhere, including Turkey. But as I said, when the dust settles, they will look at fundamentals. And fundamentals matter. Not when, you know, when they're faced with a crisis. That's when indiscriminate selling is the norm. But a few months down the road, fundamentals will be key. So that's why, again, Turkey is better positioned to deliver growth once we're through this episode. Another major problem in the world is aging populations. If you look at, you know, recent trends, normally it took over 70 years to double, you know, 65 years old as a percent of total population, you know, from 5% to 10%. But from 10% to 15%, it's going to take 25 years. So the world is faced with a dramatic, unfavorable demographics. How about Turkey? Well, our fertility rate is down. That means aging is coming. But we still have a window of opportunity of at least 20 years. Why? Well, first of all, our working age population growth is still in positive territory, remains so over the next decade. Secondly, much more importantly, female labor force participation rate in Turkey is pretty low. It's about 36%. We are now introducing reforms to boost female labor force participation rate. And through that, that window of opportunity gets extended by another decade or two. So we're still in relatively good position. Let me give you a few headline numbers. Every year we have 900,000 university graduates. This is a big number. Every year we have 430,000 graduates from technical schools, vocational schools. So if anyone is interested in investing in Turkey, I doubt they would be faced with lack of skills, even if they tap the top 10% of these newcomers. Therefore, we're still in relatively good position. We live in times of conflicts. That's yet another challenge for the world economy. This is from Council on Foreign Relations. Conflicts all over the places. Some of them are hot, some of them are less so. But at the end, it looks like we've got many tensions, many conflicts. So what happens when you have this type of global backdrop? Well, you tend to spend more on security, on deterrence capability. Yeah, that's how it is. Not surprisingly, world defense spending has doubled. Highly likely it might double again. This time, not in 25 years, maybe in a decade. We don't know, but seems like the case. European Union, I can tell you, you can see from numbers, traditionally, they used to spend about 150 billion euros a year. Now, they seem to be spending double of that amount, and that's not enough. For the next 4 years, they plan, and they've already introduced a break in their fiscal rules to spend an extra 400 billion euros. These are big numbers. So, how Turkey is positioned? Well, first of all, Turkey has a strong deterrent capability. Why? Because we have a large army. We are second within NATO. In fact, if you look at Global Firepower Index, which I came across, Turkey, at the beginning of this year, there was an index publication, Turkey ranks number 9th out of 145 countries in military strength. We have a very large technological and military industrial base. In fact, we've achieved 80% self-sufficiency. So, in terms of deterrent capability, we have what it takes. If the world is going to spend more, highly likely that there will be spillovers for Turkish defense industry. Why? 25 years ago, Turkey was one of the top 3, top 5 importers of defense equipment. Today, it is almost, I think this year might be the case, last year was 11th, we might be in the top 10 global exporters of defense equipment. We currently have 3,500 companies in defense industry actively developing, producing things, compared to 2,500 in the entire European Union. Just to give you a perspective, we have over 1,100 ongoing projects. Some of them are design, some of them development, some of them manufacturing, kind of like stages. So, and there are increasingly more large Turkish companies in global defense scenes. So Turkish defense industry is likely to benefit from this trend. If I can get it to work. It was working. Do we have another one? Okay, it's working. All right, it's working. Now, another challenge, or maybe not a challenge actually, help on the way, is generative AI and robots, I mean, the rise of robotics. AI has immense potential to boost productivity. So that's a great opportunity for the world. The problem is, in a fragmented world, this is not going to be, unfortunately, equally available to everyone, because protectionism has already begun. Biden administration, on their way out, they limited AI, enabled chips, they classified countries. So they're not selling it to everyone. There are all sorts of concerns, but I think this area is going to be one of the most critical areas for everyone, both in terms of disruption, but also in terms of productivity. AI models are getting exponentially powerful. I think we are almost at artificial general intelligence, so human-level intelligence. And within the next 5 years, experts say we will reach artificial superintelligence. So there you go. Completely new world. Are we prepared? Is Turkey prepared? Well, if you look at Turkey, it's somewhere between advanced economies level and emerging markets level. So we are ahead of our peers, but we lag advanced economies level. So this is why this is one of our top priorities. We're going to invest very heavily. First of all, we have the human capital. Now, this is really critical. This is from Stanford University. You know, I'm not making this up. According to Stanford University, if you look at the number of graduates from computer science, computer engineering, or IT in general for the past, 10 years, Turkey ranks very high, which means we already have the human capital in place. It's just a matter of utilizing it. I'll come back to that in terms of what we're doing. We are investing very heavily in tech, AI infrastructure, and the next few years will be turning point. Innovation ecosystem is very important. Innovation usually, you don't do it out of choice. Circumstances require that. Same applies to, for example, military. Our NATO allies withheld equipment from us, so we ended up producing it. The same applies to many other areas. If you look at Global Innovation Index, last year's data, you will notice that among the upper middle income countries, and that's where Turkey is, we are the third most innovative economy after China and Malaysia. That's good news, but certainly we would like to be among high-income countries soon, and we want to be as innovative as them. Is Turkey ready for frontier technologies? This is, again, we are, relative to our per capita GDP, we are not slightly where we would like to be. We're close to our potential, but some push is needed here. So I think in particular in areas in terms of access to finance, that's one of the main drag why we're not there. And that's why we are implementing a disinflation program to bring inflation down and to enhance access to finance. So if we can address that, I think we're done. We're going to be, relative to our per capita GDP, we'll be readier to adopt frontier technologies. Global warming is real. We know that. What are we doing about it? Well, we are going to be affected by it, so no question. Turkey is not immune. Unfortunately, I can't really tell you that we are better prepared. But all I can tell you is that we are investing very heavily in renewable energy in terms of energy transition. Why? Well, first of all, for us, it's a must because we pay a lot of money every year to import oil and gas, and that causes trade gap and that causes current account gap. So to the extent that we can address this problem, we will also improve macro-financial stability. But also, we are keen in achieving net zero. So as you can see, the share of, the power, almost 50% of power in Turkey is generated via renewables. We would like to boost that to at least 70% in the next couple of decades. And nuclear is coming on board, hopefully soon. We've invested very heavily in water preservation, irrigation investments, they call it. We've invested $90 billion. Chances are we're going to continue to invest heavily in this area. Okay, as you can see, there are many global challenges. And I can tell you that relative to the rest of the world, or at least our peers, we are better positioned to deal with it. Or we are relatively less exposed, relatively speaking. We're not immune, so don't get me wrong. We're just relatively more resilient. And so we will continue to invest in resilience. Because in an uncertain world, where complexities are the new normal, volatility, uncertainty, clearly the best thing you can do is to enhance your resilience to external shocks. And that's exactly what we're doing. So it looks like on a 5-year basis, these are IMF data, by the way. IMF, every year, they look at 5-year ahead growth. And this is the lowest level we have reached in decades. I think with this trade fragmentation that has emerged early part of this year, chances are the world will not be able to sustain 3% growth. So how about Turkey? If you look at the last 100 years, real GDP growth rate has averaged to 4.8%. If you look at the last 2 years, it's been turbulent 22 years. Global financial crisis, Arab winter, geopolitical tensions, wars in the neighborhood, pandemic, I can go on and on. And despite all that, real GDP growth rate has averaged to 5.3%. If you take 2002 as your base year, because that's where the current ruling government came to power, and if you say it's equal to 100, and look at it in constant prices, meaning if you look at it in real, terms, Turkey's GDP has gone up from 100 to 312 over the past 2 decades. You may say, well, emerging markets are pretty close to 198, so really, you've slightly outperformed. It's true, but if you look at emerging markets, excluding China and India, those are big countries. Then it is 221. So relative to 221, 312 is pretty large outperformance. So as you can see, we've done well. So our job is not to talk about past. Our job is to lay the foundation for strong growth going forward. And that's why I tried to tell you about global challenges, how, they are drag on growth compared to Turkey, where we have advantages. So, what are we doing to reduce vulnerabilities and building resilience further? First of all, we are in the process of bringing inflation back to earth, meaning reducing inflation to hopefully single digits. Strengthening fiscal positions to create fiscal space for reforms, narrowing current account deficit to reduce the risk of macro-financial instability, and to boost or deliver on structural transformation to achieve higher productivity and higher competitiveness. Inflation is falling. It will fall. There are a number of reasons. I don't want to take more time on this. We've done everything to push inflation down. We are committed to this program. There's a strong political commitment. We've invested a lot of political capital in this program. And we have what it takes to bring inflation down. So inflation will come down. Now, you may be wondering how the latest market turbulence is affecting this inflation program. Expectations may deteriorate in the short run. That's the case everywhere. But expectations ultimately will look at realizations. And we believe that this inflation will continue. There's been limited lira weakness that is likely to push inflation a bit up, but the pass-through is weak from exchange rate weakness. Why? Because domestic demand is not very strong. But there is a compensating factor, and that is weaker oil prices. Oil prices have declined substantially on the back of these tariffs. If oil prices stay low, it's quite likely the decline in oil prices will compensate the deterioration in inflation expectations and limited lira weakness and the pass-through from that. So that leaves us with a short-term tighter financial conditions. Yes, we had to tighten financial conditions to deal with recent market turbulence. And that means the net expected impact is likely to be disinflationary. I know that's not how many people think, but that's our analysis of how things are likely to be. Second, on the fiscal side, on the back of major earthquake spending, our deficit has been elevated for the past couple of years. This year, we're shooting for lower deficit. We will maintain spending discipline. Revenue obviously could be negatively affected by tighter financial conditions. But why were we interested in fiscal consolidation? Not because we have high debt. This is government debt. External and domestic gross public sector debt as a percent of GDP in Turkey, it's 25%, compared to 71% in emerging markets. So, this is not about debt sustainability. Why are we interested in fiscal consolidation, in lower fiscal deficit? Because we wanted to help central bank bring inflation down. If domestic demand weakens, and that translates into lower revenues and higher than expected, let's say, fiscal deficit, but if inflation falls, we still have the same end game. So the key here, we will maintain spending discipline, no question. But revenue performance, we don't control. So expected net impact of the recent market turbulence may be weaker fiscal position compared to our medium-term economic program. This is a guidance about where we had it. Another major macro challenge for us is historically we've had large current account deficit. Large current account deficit means you accumulate external liabilities. External liabilities tend to exacerbate external shocks when you're faced with them. That's why it's very, very important that we reduce current account deficit and then structurally turn to current account surplus. When we speak of current account surplus, usually people are pretty skeptical. I can tell you last year, Turkey actually, excluding gold imports, gold is not edible, as you know. Gold is a financial asset. It was a part of portfolio positioning. If you exclude gold last year, we actually had a current account surplus at a time when we maintained a modest growth. So I think we're almost on the verge of getting to a point where Turkey can grow moderately with almost no current account deficit when you exclude gold imports. Now this is very critical. We didn't get here by an accident. It's been hard work of the last few years, but the hard work is not done. We still have to do a lot. So right now, the adjustment is on the back of cyclical. It's a cyclical adjustment. To make it sustainable, we need transformation. And that's why we need energy transition. We're already having it, but to sustain it, new industrial policy. New industrial policy is absolutely critical, and I'll tell you about it. So current account deficit is still modest, 0.8% of GDP last year, including gold. Turkey's gross external financing requirements are falling. We are committed to reducing it further. During this 3-year program, we would like to get back to the best years of Turkey, where we had achieved investment grade. How about the recent market turbulence and the impact on external balance, on current account? Well, slower global growth is the base case scenario. That means weaker exports. Not yet evident, but could happen. Year on year, first quarter, our exports are up. Slower domestic demand on the back of tighter financial conditions. That means weaker imports. So maybe it balances each other. No. lower oil prices means quite a significant, narrowing of trade gap. If that is the case, we may end up, relative to program targets, with a lower current account deficit. We've done rebalancing in the economy. I don't want to spend much time. Labor market remains very healthy. We created close to 1 million jobs last year. This is quite an achievement. If you look at 15, 20-year averages, we tend to create about 680,000 jobs. So creating 1 million jobs at a time when you implement a macroeconomic stabilization program is quite a something. And that's why unemployment rate among males is at historic low. Why don't we get unemployment rates of 3–4% like many other places? Because we lack flexibility. Turkey, unfortunately, doesn't have much part-time jobs or doesn't allow it. And because of that, our labor market tends to be more rigid and tends to have higher unemployment rates. So how about growth? Well, tighter financial conditions, externally weaker demand, and negative sentiment that currently prevails, all of these means possibly a more moderate economic activity, meaning slower growth. We have rebuilt reserves. Of course, we deployed these reserves in the face of this market turbulence. We are reducing contingent liabilities in the form of FX-protected lira deposits. So it's down to about $20 billion from over $140 billion. Risk premium has gone up, but it's gone up almost everywhere. Relative to other countries, since the program began, Turkey's CDS, meaning risk premium, fell 330 basis points. In emerging markets, it fell by 10 basis points. Again, spreads, we used to underperform the red line, emerging markets, space. Right now, we're still in relatively good shape compared to what emerging markets are paying over similar maturity, U.S. Treasury bonds. We have achieved, rating upgrades. There may be a lull in the short run, but we are committed. We believe we'll get back to where we were. Structural transformation is a critical area. In particular, investing in human capital, meaning upskilling, reskilling people, improving investment climate, deepening capital markets, public finance reform, green transition, digital transformation, and industrial policy. All of these are part of our menu. I'd like to focus a little bit about some of these key initiatives and conclude my presentation. Turkey has relatively high manufacturing base, or manufacturing, relative to its per capita GDP. The problem is we are more concentrated in medium, medium-low, medium-high. So the high-tech stuff makes up a small portion of our manufacturing. That's why we have programs to address this. And so HIT 30 is a program that aims at attracting investments in high technology areas. HIT 30 means between now and 2030, will provide $30 billion for 30 main products, over the next 5 years. Already, we have attracted quite a bit of interest. We believe we'll achieve that. Industrial policy also includes preferential credit policy. We've identified 284 medium-high tech products. They make up almost our entire external deficit. So instead of choosing tariffs to balance the external, balance, we choose to have policies or incentives, motivation as a motivation, to attract investments to narrow that gap. So again, it's open to everyone, 284 products. Anybody who wants to invest, we will entertain and provide, loans with a 2 years grace, 10-year maturity in lira at 1/3 of market rates. We're investing heavily in digital infrastructure. Fiber optics, in particular, is top priority. The length is almost 600,000 kilometers. What next in digitalization? This year, we're expanding fiber capacity. We're investing in 5G+. Hyperscaler data center is in the, hopefully will come soon. Building a spaceport to create our national Starlink and GPS. Investing in nuclear power plants because AI needs nuclear power. Human capital, regulatory ecosystem, and local LLM models. So we're doing everything to be more prepared for AI. Green transition, I mentioned earlier, over the past 22 years, we paid almost $1 trillion to our neighbors mostly to import oil and gas. Green transition for us is not a luxury, it's a necessity. And that's why we have a reform agenda, but green transition is well underway. We're going to also invest in productivity enhancing infrastructure. That means railways. Leveraging Turkey's regional position. This is a big economy, $1.3 trillion, 86 million people. In fact, if you include refugees, it's almost 90 million people. And a per capita GDP of over $15,000. So there aren't that many countries with these sizable markets. I know they always express concerns about many things when it comes to investments. But I think the sheer size of the market, combined with our efforts to enhance predictability through lower inflation, lower fiscal deficit, lower current account deficit, will help attract investments. This is just to compare Turkey versus broader region, entire Middle East, entire North Africa, Balkans, Central Asia and Russia. Turkey is likely to benefit from reconstruction of war-torn countries. Why? Because we're only second to China in terms of global league of contractors. So we are a major global player in construction league. Even when there is peace, we will step in to help reconstruct. Tourism. It's a big industry. We are in Antalya. Last year, Antalya attracted over 17 million tourists, one city alone. So we have ambitious targets. We've delivered. In 1990s, in 2000, we were barely in the top 20 in terms of tourism league. Today, we're in the top 5. And so tourism is something we prioritize. Medical tourism, again, is developing pretty fast. Last year, medical tourism market roughly was estimated at $70 billion. Last year, we attracted over $3 billion of revenue from medical tourism. We think we can gradually reach to 7 to 10% of global market over the next decade. Turkey is a major energy hub. So Europe needs Turkey when it comes to energy security, when it comes to overall security. In fact, we are interdependent on each other, but politics gets in the way. I think the new world, assuming these paradigm shifts, are sustained, chances are we'll be closer, looking beyond our own faults, each other's faults. Meaning, if you seek perfection in your partners, you can't really make any progress. Perfection is the enemy of progress. And therefore, I think we'll start focusing on positives, on what practically is doable and deliverable. So we'll get there. Again, we have the second largest regasification capacity in Europe. We are in the so-called Super League of Angels and Venture Capital Deals League as of last year. We are one of the leading gaming ecosystems, only second to London actually. Istanbul is only second to London. We had a couple of unicorns already in the gaming industry. Turkey is the third largest exporter of TV series globally. You know, early part of this week, we had a joint economic commission with Chile. The foreign minister was my counterpart. And we were talking about, you know, a number of Chileans visiting Turkey going up from very low of 3,000 to 25,000. And we said, so what triggered this? Apparently, the Turkish operas, soap operas. It really helps. So Turkish Airlines, of course, helps too. But it's soap operas that creates quite a bit of interest. We've invested very heavily in infrastructure, about $300 billion over the past 20 years. We're going to invest another at least $200 billion for the next 20, 25 years. That's why, if you look at the world's fastest roads, we are among the countries that offer the world's fastest roads. Why? Because we have increased multi-lane roads by 6-fold in this country within the last 2 decades. Again, we're done with airports because we really invested heavily in airports. Almost every single province is now through regional airports or nearby airports are connected. In fact, the new airport in Istanbul was chosen as the largest hub in Europe. So the world's best connected airport apparently is Istanbul, because Turkish Airlines flies to the most destination in the world. Well, that was my presentation. I don't know if my goodness, I left 10 minutes. So, thank you.
Thank you very much, Mr. Minister, for your insights and for this comprehensive presentation on the global challenges and strengths and opportunities within Turkish economy. So I believe we have limited time, but we will take some Q&A, and I'll be here to facilitate that. So if you have any questions, please raise your hands, and then we'll have one of my colleagues bring you the microphone. Okay.
Here, I guess.
Sure.
Thank you very much. Thank you so much, Minister. It was very interesting to hear you speak. I work for the UN Population Fund, and I was delighted to see you speak to demographic factors. Turkey also has 1.6 million new entrants to the workforce every year, and it's going to continue to have that over the next 10 plus years. And when you look at the NEET rates, the young people not in education, employment and training, they double that for young women compared to young men. The third dimension is about care work. The burden of care work on women, which is between 85 to 95% of all care work. These are dimensions that you would be looking at, I trust, as you go forward to boost women's economic engagement. We'd be happy to speak in more details about the data. Thank you.
Well, first of all, thank you for highlighting some of those. And we would really appreciate tapping your knowledge base and your wisdom. Please get in touch with us. We'll be happy to host you in Ankara. Thank you.
Okay, do you want me to
You're the moderator.
Okay, please.
University. I'm going to ask a question. In terms of health tourism, we are gaining a lot. Growth rate is significant. But in terms of international education market, we have 350,000 students. But in terms of revenue, this growth rate is incomparable with health sector. We have less revenue from international education. I believe there are some reasons, maybe lack of regulation, and another reason could be we need to allow international students part-time work. What is your position about this? Thank you.
Look, I thank you for the policy recommendation. We're happy to entertain those recommendations. Obviously, I'm not the only one who makes decisions on these issues, but why don't you put together for, a brief paper on what's holding us back when it comes to attracting international students, and we're happy to look into that. Thank you.
Thank you very much. Okay, that lady over there.
First of all, thank you for your speech. I'm a master's student of international relations at Middle East Technical University. Recently, you have mentioned the airports, so I would like to ask you, how do you evaluate the positive impact of having more airports when we consider the cost of maintaining the airports? Thank you.
Well, thank you. Look, connectivity in today's world is absolutely essential. There's a saying in Turkish, yol medeniyettir, meaning road is key to civilization. But of course, it doesn't mean just roads. Road means, in today's world, it could be energy infrastructure, it could be airports, ports, it could be fiber optic, whatever. It could be Starlink, your own, of course. So it could be anything. So I think infrastructure is absolutely critical. In fact, yesterday I was on a panel and I said it takes 3 factors to become an empire or a superpower. You would have to have human capital on a big scale, but human capital doesn't mean numbers. It means quality human capital, meaning you need to invest, like in Matthew. Secondly, you need to have the infrastructure, broadly speaking, broad infrastructure. And finally, technology. So yes, I think, look, there are occasional debates as to whether that airport was the right thing to do or not. But really, you always get a few you get everything right. That's almost impossible. What is important is that you deliver, more than 2/3, 65, 80% right, 90%. If we can deliver, the program targets of, let's say, 70%, 80%, I would feel pretty happy. We have delivered. So when it comes to the airports, yeah, of course. Look, there was a big debate, big controversy about second airport, the big airport in Istanbul. You probably remember. And as a student, maybe you didn't think it was the right thing to do. But look at today. It's amazing. It really does add quite a bit of value. We got private sector to build it, and they're now paying us money for operating it. And they create quite a bit of value. And it's still in the making, meaning it's always work in the making. So yes, I think the country is largely done with the airports. We're largely done with road network. But railway, we lag. And we need to be at par with countries like Germany when it comes to railway infrastructure. Why? Because railway transportation is low cost compared to other forms, and you can decarbonize. So if you produce electricity from renewables, if you electrify your entire rail network, that means, you've got low carbon footprint and low cost in terms of transporting goods. And that's key to competitiveness in today's, cutthroat, low-margin business environment.
Thank you very much. And Minister, as I understand, we are tight on time, so let's say 2 more questions.
Yeah, 2 more questions.
Okay, and please don't envy me if I don't
there's
forget.
a lady all the way in the back, and there's a
All right.
gentleman over there. So, but I'm
Okay.
just telling you.
Okay, thank you. I'll go with your choice.
Hello, Mr. President. First of all, thank you for the presentation. It was very insightful. I am a student in Yıldız Technical University. I would like to present myself first. You said that technology is a prominent factor in leveraging growth. I would like to learn your opinions about blockchain technology. I know that central bank digital currency is progressing, but it's usually viewed that Turkey takes a conservative approach for blockchain, but I think it's a very important factor in leveraging for the future. I'd like to learn your opinions about that. Thank you.
Well, thank you very much. First of all, we do not have a conservative perspective on blockchain. Blockchain is a great technology platform. Where we have a little bit of conservatism, it's more crypto. But again, we accept that the world wants that and that Turkish people want it, so we facilitate it. As you know, we passed a crypto legislation last year, so we have a legal framework in place, so we're facilitating it. So really, if you, maybe there was a bit of confusion. Blockchain is a great new platform for many, services to be provided much more efficiently. So we are a true believer in that, and we would like to develop that. It was the crypto that we had a bit of concern, but of course we have to respect people's choices, their portfolio preferences, and that's what we do.
All right, thank you very much. And last question of this session, the gentleman at the back that the minister picked.
I didn't know. I just said there were a few people.
Okay.
You pick.
To the right, over there. Yes, please.
Mustafa Darjan, I'm an international relations student at Ege University, and first of all, thank you for the presentation. And my question is about, as you said a few minutes ago, protectionism has begun once again in the world, and so how will this situation affect Turkey's economic policy in globalized world?
Well, our policy choice, meaning our preference, is for the world to return to rule-based, open, multilateral trade framework. But the reality is that seems unlikely. So how do we adjust? We have to adjust in three ways. First of all, we would like to protect our rule-based trading relations with European Union and, of course, with total of 54 countries. We want to add more in the immediate neighborhood in terms of free trade agreements because we are true believers. Because if you don't have competition, there is no innovation. It is. I mean, look, without competition, you cannot be productive. You cannot be innovative. We're not afraid of competition. We are, of course, not happy with, some countries that don't provide us with level playing field. I'm not going to name countries because we are a Diplomasi forum. That wouldn't be appropriate. But there are some countries. So we wouldn't be happy about that. But as far as, generally speaking, we would like to have rule-based trade. That's number one. Number two, regional integration is key. Because in the region, you've got countries in your immediate neighborhood, clearly connectivity is there, plus there are linkages, historic, cultural, sometimes religious, sometimes political, but at the end, there are linkages, so it's much easier. And also, entrepreneurs tend to hang out in places that they're more familiar with, affinity. So it's when you do business in Azerbaijan, it's like doing it in Turkey. When you do business in, let's say, northern Iraq, it's like doing it in southeast part of Turkey. Same stuff, same people, same culture. So regional integration as an antidote to global fragmentation. Finally, of course, if everyone is going to try to, raise tariffs, we can't watch, yeah? So we would have to be careful in balancing things out. But there are no winners of trade wars. Everybody would be a loser. That's why we prefer open and free trade. The reality is, we'll see how things pan out, but we're working on all scenarios, and we will act accordingly. Well, thank you very much. I hope we answered most questions.
Thank you very much, Your Excellency, the Minister of Treasury and Finance of the Republic of Turkey, Mr. Mehmet Şimşek, for sharing your insights with us and the comprehensive outlook on Turkish economy. Thank you very much. Appreciate it. And with that, the session comes to an end. Thank you very much for attending.